Global financial turmoil tops the agenda as the International Monetary Fund and the World Bank hold meetings in Washington, D.C. The organisations face significant challenges and criticism too. Can they help vulnerable countries, or will Western interests take priority? This is Inside Story. Hello there and welcome to the programme. I'm Nick Clark. So the spring meetings of the IMF and the World Bank in Washington, D.C., well, they have a rather more icy feel than their seasonal name might suggest, with fears that the world could be on the verge of an economic winter. A blast of instability originating in the White House means this year's agenda is dominated by the impact of US President Donald Trump's trade policies. The IMF and the World Bank may have some of the brightest brains in the business, but their skills don't include an ability to foresee the future or what Trump might do next. Set up after World War II to stabilise the global economy, both financial institutions struggle to cope with volatility and unpredictable events. They're also accused of being dominated by Western interests and shackling rather than supporting developing nations. So what role can the IMF and the World Bank play in the current economic crisis, and what impact is Trump having on them and on their policies? We'll discuss all of this and more with our guests shortly. But first, this report from Hamza Mohammed.
Global finance leaders are meeting at a time of unprecedented global tariffs, warning that the repercussions of the trade war between the world's two biggest economies could be felt for years to come. As a result, the International Monetary Fund has slashed its global growth forecast, and not just for the US and China. It now expects the US economy to expand just 1.8% this year, less than it projected in January. And China's to grow 4%, a full percentage point lower than earlier estimates.
The tariffs are certainly weighing down, but the uncertainty about what trade policy might be in the future, whether in a month, in a week, in 6 months, is also weighing down very heavily. If you're a multinational right now, where to source your products from, where to expand in terms of your markets, you're pausing everything.
The tit-for-tat tariff exchange began when Donald Trump returned to the White House. To date, he's raised levies on Chinese goods to 245%. China has hit back, imposing duties of 125% on American goods. The escalation has shaken global markets. Adding to the uncertainties, reports that President Trump was planning to fire the head of the US Federal Reserve. But on Tuesday, he said he had no plans to dismiss Jerome Powell.
Never did. The press runs away with things. No, I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates.
The current turmoil is affecting economies around the world, not least because the US tariffs apply to virtually every country. Many are already grappling with challenges such as conflict or the effects of climate change. For these countries, decisions taken by the IMF and the World Bank can have significant consequences. But both organizations established to support global economic stability are also impacted by the current market volatility. And it's not clear yet what effect the turmoil will have or how long it will last. Hamza Mohammed, Al Jazeera, for Inside Story.
All right, let's bring in our guests. From Lahore in Pakistan, we're joined by Ali Hasanain, who's an economist and associate professor at the Lahore University of Management Sciences. Vicky Pryce is in London for us, chief economic advisor at the Centre for Economics and Business Research. And in Brussels, Daniel Gros, a board member at the Centre for European Policy Studies and a former IMF official. A warm welcome to all of you. Daniel, I'd like to start with you first, if I may. So last time the IMF and the World Bank met in the autumn, it feels like the world was a very different place, doesn't it? Indeed, the American economist Ezra Prasad, who himself served as a former head of the China division at the IMF, he said the post-World War II rules-based system of global governance, in which the United States played a key role in fashioning, it's crumbling before our eyes. Daniel, do you agree with that?
Only partially, I must say. I think the American economy is not large enough and Trump is not powerful enough to destroy the global trading system. Of course, Trump can really put sands in the wheels of the commerce of the US with Canada, with Mexico, with China, and maybe some other countries around the world. But if all the other countries, which account after all for the great majority of trade around the globe, if all the other countries stick to the rules, then I think outside the US, the global trading system can survive.
Vicky, what are your thoughts? Do you agree with that?
Well, I hope that's right. And I do think, nevertheless, that there's been a real sea change in the world environment, that we can no longer rely on the US to, if you like, support the rules that are out there for world trade, and also act in a way which would suggest that one can rely on the US for whatever eventuality. And I think the interesting thing for me is comparing what's going on right now with how everyone behaved, certainly the central banks and governments during COVID, and also during the energy crisis that followed the war in Ukraine, the beginning of the war in Ukraine, which is that there was coordinated action. Everyone stepped in more or less a similar way, a lot of discussions among the countries in terms of what was the best way to react. And I think that stabilized the situation. Now what we're seeing is that it's an adversarial one, and that isn't good news in terms of world growth. And the IMF has reflected that in its forecasts.
And Vicky, earlier I described the situation, or how many people are describing the situation as us being, the world being on the verge of an economic winter. Is that too extreme, Vicky, do you think?
I think if things stay as they are, then yes. If trade is really reduced, as it's likely to be, I mean, there is no trade effectively right now between China and the US, and yet that trade is really important. Loads of others have just stopped. Lots of other countries have just stopped exporting to various places, just not certain about what the environment would be. Low trade intensity means a lot less growth, not just for the developed world, but also for the developing world. And also, I think we're moving into what everyone has been describing as a polarized environment, where there could be little groups, in fact, of quite big countries getting together to do their own thing and their own trade. And that really disturbs and disrupts the way in which trade has been done, which has generally been done in a way to ensure we have the highest productivity, lower costs, and the supply chains that we're operating have been developed for a reason. You disturb all that and growth suffers.
Right. Ali, in Lahore, what's your perspective on these institutions and the potential impacts for poorer nations like Pakistan?
So I think Pakistan and other smaller countries will, of course, be impacted at the global stage also. So if the global economy suffers, then all of us will suffer. I think for some countries like Pakistan, the amount of exposure to international trade is much less than others. And so there'll be differential impacts of these coming changes on different countries. But if you think back, a few years ago, the UK did the world a favor by demonstrating what happens when a country decides to de-link from an economic region. Now scale that up, and we're looking at something that is perhaps unprecedented in certainly my lifetime, in the extent of impact that it can have. Yet at the same time, I think estimates that are more sort of catastrophic in nature are perhaps exaggerated. I think we're going to potentially see a trimming depending on how this plays out. But at the same time, when countries start bearing the costs, when America starts bearing the cost and China, I think you'll start to see people move back from maximalist positions, and we'll continue and see things survive.
Okay, we're going to explore all of that a little bit more later in the show. But Daniel, there were calls, weren't there, not least from the Project 2025, which was drafted by Trump's allies before the election, for the US to withdraw from these Bretton Woods institutions, the IMF and the World Bank. And we're not really getting much clue as to how they're going to be positioned, because at this point in time, they haven't appointed a permanent director for either of the boards of the IMF or the World Bank. So what does it suggest to you, Daniel?
There's probably going on a tug of war within the White House, with some people telling Trump, stick to your guns, just get out of it. And other people would say, look, there are some advantages to be in there, not least that we are the biggest shareholder. If we get out, then China might be the biggest shareholder and might get a lot of influence. And also people will tell him, if really the US went out of the IMF and the World Bank, you will have all sorts of financial market disruptions. And we saw already last time that Trump did pull back from the abyss when it became clear that his actions were too destructive. So I think in the end, he will not pull out, but we never know. If the last person he talks to is one of them, these people who are maximalist from the Project 25, then he might send off a social media post saying, I hereby declare that the US gets out, but then maybe we'll have to roll back a few minutes later.
Right. Well, some would argue that Europe should cede some shares in the World Bank and give them to China, right? Anyway.
That, I think, has been a long discussion, and it's long overdue. It's not so much that the West influence in the IMF is so big, it's the European influence, starting from the person of the managing director. Also, she does a very good job, but the European shares are way too large, and I think Europe should see that it should cede some of its quotas to other countries whose economic weight is not really represented in the IMF, like China.
Vicky, if the US was to pull out of these institutions and risk ceding more global influence to China, what would the impact of that be if the US goes its own way?
I think the first thing would be serious concern about the financial stability, because, of course, the IMF is very much responsible for ensuring that global financial stability is retained. And they have been very influential in getting very involved in individual countries and ensuring that this doesn't lead whatever is going on in those countries to perhaps a real fallout, which could affect lots of others. So contagion, which is an important issue. So Argentina, for example, has just received an extra 20 billion. And that should be sort of quite helpful for them. Now, the question is, if the IMF for some reason loses its biggest shareholder, will the rest step in and make up, even if their shareholding increases, will they make up for it in terms of the amount of money they put in? But in reality, will shake the system quite significantly. So there are going to be quite substantial repercussions, whether they're reflected in terms of the rates that capital markets charge to lend to individual countries in difficulty go up very significantly. What happens with the whole financial system, which is now very, very interlinked globally? All these issues will be really seriously looked at and could cause all sorts of tremors, if you like. We've seen them already with tariffs. I think that's going to be even bigger, in my view. And then if you look at the World Bank, the World Bank is there providing quite a lot of support, particularly for developing nations. And that has been very significant. It's been able to borrow quite cheaply in order to do that. Of course, that borrowing quite cheaply is also influenced by who the contributors are to the World Bank, and therefore the rating and therefore the interest rate that they're able to raise will also be affected. So I think there are serious repercussions if that were to happen. But as we just heard, well, possibly won't last for very long if it does, but it will have created lots of ripple effects across the world.
Ali, from the point of view of developing nations, of course, there's been major criticism that these institutions are Western dominated and promoting Western interests before others. What about, for example, Pakistan's relationship with the IMF? And they've been in this loop of loans that they never seem to be able to get out of.
Yeah, so Pakistan has been using something is essentially a resource that is supposed to be a short-term support to create stability, and it's been using it for about 60, 70 years now. The history is that every time a 3-year loan ends, we are immediately put into a new one. And so this 3-year program has been running for about 60 years, which creates all sorts of dysfunctionalities. What's happening now, interestingly, is that as China has increased lending bilaterally to developing countries, there is clearly this tension that's being created for developing countries that are trying to engage both with the IMF and with China bilaterally. Many of China's loans, not just to Pakistan, but other countries like Sri Lanka and Bangladesh and many African countries, have become bad debt because the projects that were selected for that aid were not sort of wisely done. And these countries, all of these countries are poor for a reason. They're not well governed. And so when new loans come in and they're badly used, it creates this sort of failure to pay back to China. And then on top of that, what's happening now is that when we go back to the IMF for a new loan, there is this, let's say, a lack of syncing between China and its loans, those streams, and the loans that we're accessing from the West. And so it becomes much harder for both sides to figure out whether to extend the next loan because there is an independent other player to think about. So it's a much more complex world for developing countries like ours compared to, let's say, 10, 15 years ago.
Right. Well, it sounds to me like reform is urgently required, isn't it, Daniel?
Some reform, certainly, but I think it's not forthcoming because it's not in the interest of the Europeans, at least superficially, to be generous to somebody else. And it would take a lot of pressure, I think, actually from the US to arrive at that. But Trump is disengaging. So I think for the time being, the perspective of a fundamental reform of the IMF doesn't look very good.
So, Vicky, do you think there's a need for more representative global financial governance? I mean, already we have the Asian Infrastructure Investment Bank and the New Development Bank. But does it need to be more of a global view as opposed to something that's coming directly from the West?
Yes, I think that is probably something that's been needed to be done for some time now, and it is also when you look at the remedies which the IMF normally puts on countries, they may not be appropriate to those countries. I mean, we saw some of that, for example, even during the Eurozone crisis, where the IMF was very heavily involved, sort of assisting the rest of the Europeans to exercise control over what quite a lot of countries were doing through the implementation, if you like, of the Stability and Growth Pact that was there. The IMF was very involved in this, and I know this from my own experience and having done quite a lot on Greece. So you could argue that perhaps we needed some rethink, and there has already been some rethink. So, for example, the whole issue of how much debt can you afford to have as a percentage of GDP, that's been rethought, and now, for quite some time, we have had a bit of a relaxation on that, and the IMF has therefore been a little bit more benign in its prescriptions. But now, of course, we are in a situation where things are turning sort of negative again. And my fear is that the IMF perhaps will suddenly become sort of stricter. And if you hear what was said by the head of the IMF, it was all, again, watch your fiscal side. Well, in reality, quite a lot of countries are going to need to spend more again in order to support industries that have been hit by the tariffs and by the uncertainty that we've got right now. So yes, a little bit of rethinking is definitely done, and a little bit of more widespread understanding of implications of whatever is going on and the remedies that are needed for each individual region. Understanding that a little bit better is, I think, something that needs to definitely progress.
Okay. A significant part of all this conversation is the battle against climate change. It's a significant part of the World Bank mission. 45% of its annual budget lending, or its annual lending towards climate-related projects in 2025, potentially now under threat. So, Ali, given that a lot of that money helps countries like Pakistan shoulder the burden of adapting to climate change and helping with the transition to sustainable energy, that's a real problem, isn't it?
Absolutely is. I think there are multiple dimensions to the climate story. One is ultimately sort of the real politic of extending resources, the unilateral transfer of resources from developed countries, those that have historically created a larger climate burden for the world, towards countries like mine that have contributed very little to pollution and are some of the most sort of unstable in terms of the vulnerability. That ultimately will be a decision that is made on, you have to, each country will think also in a self-interested way. while we are trying to create global solutions to this. So there's an interlocking of multiple issues here. I think as China and the US start competing more for global influence, there is potential for an enhancement of climate financing simply because they're seeking greater influence with other countries. At the same time, I think one of the biggest angles to climate financing has to be efforts to mitigate risks for everyone and for preserving humanity. And historically, the world hasn't done a great job at it. We'd probably get a failing grade as a whole. So a couple of years ago, Pakistan was hit by sort of calamitous floods, which were the result of melting of glaciers in the north of the country, and these were caused not by anything of Pakistan's doing, which contributes very little to burning oil and so on. And yet, sort of the world did not really step in.
Right. It's a problem that's not going away either, and it's just an ongoing problem we're seeing almost every day with various big weather events around the world and floods and wildfires and so forth. Daniel, what's your take on this and the importance of climate change? Because it is a significant part of the finance that the World Bank comes up with for these projects to try and help countries like Pakistan and all the nations of Africa and so forth.
Now, the good side of the story is that renewable energy gets cheaper and cheaper. Here again, I think Pakistan is a good example, with lots of solar capacity being installed at falling prices. Of course, the problem remains that what has already happened in terms of climate change hits those countries hardest that are most exposed to floods and other extreme weather events. And usually those are the poorer countries which have lots of an infrastructure that could mitigate those effects. And the problem now with Trump is not only that he actively says, I don't want to support renewable energies, but he actually is an enemy of them. So even where they make economic sense, he tries to put obstacles in their way. And that, I think, is not acceptable, and the rest of the world should tell him, if the World Bank finds good projects that make economic sense, the US should not object. I think that's the main message we should have to him.
Ali, as you observe these events, are you getting the sense that the two institutions, the IMF and the World Bank, are kind of downplaying the whole issue of climate change and saying that they're going to sort of follow more of Trump's agenda, but in the meantime still continue with its, the underlying climate policy?
I think we have structural issues both within these organizations. They are ultimately bureaucracies that don't really have very, very sharp incentives to do a good job of delivering projects in any particular country. We also, the World Bank in particular, is trying to do long-term development without engaging with the fact that we have bad politics in these countries, right? Which it cannot do because it would encroach on the sovereignty of a country. So there's a rich academic literature that argues that the access to finances that both the fund and the bank create perverse incentives, worse incentives to deliver for our politicians at home, because it delinks the price tag of, let's say, a large project that a fancy project that you're selling to your voter. It delinks the taxes that have to be collected to finance it from the next election, let's say. So you do the splurge on spending, and let's say you lose the next election, you're not going to be held responsible. And the average voter is sort of hard-pressed to create that link and hold the politician responsible.
Right, it's very much a political problem. It's sort of short-termism issue, isn't it? Vicky, as we're coming towards the end of the programme, spin forward 5 years. Do you still believe that the global economic architecture as we know it right now, today, will still be here in the same structure?
It won't be in the same structure. I think even if we roll back a little bit from everything that we've seen and have been shocked by in the last few weeks, I think it's going to be difficult to move away from the fact that the world is getting more polarized, that there are groups of nations that are developing their own currencies, if you like, their own trading systems, their own regulatory framework, their own payment systems, which perhaps are going to take away from the dominance of the dollar. So I think we've moved away from that. And I think everything that we're hearing now about the US's attitude towards the World Bank and the IMF will, if anything, accelerate this.
And Daniel, what's your take on that? It brings us back to the initial question, doesn't it, about the post-World War II rules-based system of global governance. How do you assess things might be if we spin forward half a decade?
I think on the trade front, things don't look too badly. As long as the EU and China keep their nerves, don't respond overly to the US, we call them provocations, US tariffs, then the trading system can survive. And I predict that Trump will not really go out and destroy the global financial system based on the US dollar. So after all, in 5 to 10 years, we might look back and say, Trump tried to destroy the system as we knew it, but people actually then recognized its value and kept it intact.
And Ali, final word to you. What's your take on this question?
I think in the next half a decade, China will still look to grow slowly and will not be, or quietly rather, not slowly, but quietly, and will not want to disturb the system for now. And so it will really be on the US, because I don't see any natural leader in the rest of the world that can replace either of these two countries. It'll be on the US, and to what extent are they willing to risk an architecture that they build themselves to prepare in whatever way they think is necessary for an era of greater competition in the future.
All right, well, it's a story we'll be following very closely and are following very closely here on Al Jazeera, and we'll see what happens over the coming days, weeks and months. To our guests, all of you, Vicky, Pryce, Daniel Gros and Ali Hasanain, thank you very much indeed for joining us here on Inside Story. And thank you too for watching. You can see the programme again at any time by visiting our website, aljazeera.com. And for further discussion, just go to our Facebook page. That's facebook.com/AJ Inside Story. And join the conversation on X. Our handle is @AJ Inside Story. From me, Nick Clark, and the whole team here, it's goodbye for now.
Make sure to subscribe to our channel to get the latest news from Al Jazeera.